everybody, it's Chris here from Serene Education with the 4 majors and that's update for the 6th of June 2013 morning. Okay, I'll be doing the 4 majors this morning as per usual, and I'll be using the FX8 Ultimate template, which is this little box at the bottom here with 8 indicators giving us the indication of where price is likely to go to. And you can quite clearly see with our first pair of the day, the euro against US dollar, not on a 4-hour chart. Let's move to a daily. Excuse that, that's a trigger signal telling us you're looking for a buy opportunity. You can quite clearly see the indicator box is very much blue. 1 or 2 red zones, and that's primarily on a longer term stuff, i.e. the weekly here and the monthly. There's the 4-hour, the MACD, where it's not really correlating, but otherwise there's a lot more buying sentiment. RMO and the institution moving average indicator at the bottom are very much working together as a team, which tells me I should be looking for positive trend sentiments, and you can see quite clearly that the euro has been finding some positiveness against the US dollar. And you can see price has pretty much been on the upside for the past week or so. What we have is the red lines on here constitute to my monthly February tracement areas. Noticeably, this one over here at the 38.2, which is a major support and resistance level going back to the 2010 mark. You can quite clearly see just recently on the daily time frame, price has failed to break through this on a number of occasions. Tweezer tops here, resistance, and price reverted to the downside, but not getting quite close to the 23.6 February tracement area down the bottom here, clearly moving into an area just short of it and then building a nice strong support. Tweezer bottoms, nice bullish engulfing candles, and subsequently we've seen an upside move since from that. The high that we saw in January to the low in February, I've now looked to see if I can actually capitalize to the upside. 23.6 has been the first area here, noticeable resistance through most of May, breakout, the pullback, and then now what we're seeing is the continuation to the upside on the daily since then. So now heading up towards that all-important 38.2 monthly area, which constitutes to a major resistance level. We have seen resistance here in the past. Is there likelihood to see further resistance near term? Yes. And that also goes into the fundamental side. We have a lot of news out today because it's the Thursday prior to the non-farm payroll figures will come out tomorrow. Today we have the interest rates announcements this afternoon for euro. They don't expect to change, and the minimum bid rate expected to stay at 0.5%. It'll be interesting to see if that occurs, and what we should be seeing is potentially a consolidation here, but we'll see price chasing into this area. Before we get to the interest rates announcements this afternoon, we have the French 10-year bond auction deal this morning, followed by the Spanish. And then we have the German factory month-on-month order figures, which is a very, very important one. They're expecting contraction for the German factory orders. Previous figure was last month was 2.2%, which was good. That's expansion. Above the zero line, fantastic. This month, they're expecting a negative 1.0%. So quite a huge difference of 1.2% difference there. So if that comes out anywhere close to that, or higher, or less, or greater than that negative one, we're going to see euro taking a bit of a hit. And because we're moving into this major support and resistance level, we're going to start seeing that occurring now on our chart. So trade very attentively, if you guys, if you go into this area here. There is still some pips where price is trading now to this level. It's still not at 47 pips, but there's a lot of risk that you're taking on board because of that. So go to my 4-hour chart. You can see price is really consolidated now over the 4 hours. We've seen a good 48 hours now of where price has actually really come unstuck here. A lot of indecision candles. Price moving up this morning on the start of the European session, but we're going to be well aware that 38.2 has been resistance once over the last couple days. You can see there's been a noticeable resistance here at 38.2 if we head into this all-time major higher. So you're going to be well aware of that. As we've been higher, the MACD is still very much flat. RMO is still making higher highs, which tells us we should be in a trend. Swing highs, definitely we are moving higher, but we've got to be very, very aware that we are trading into an area where we're seeing a lot of prior consolidation and is more likely to see further. As long as this maintains all this, we get above this 38.2 here, the red line, happy days. For next week, fantastic, because if we do that, then on the daily, buy signal again. If we get above this, you can quite clearly see we have a lot of open space. Okay, we failed here on the daily before. We're heading into this area here. Today, Thursday, tomorrow, Friday. A lot of news out tomorrow, non-farm payroll. We don't want to be trading a lot of risk. So what do? You either wait patiently, get the confirmation, break. If we get a nice bullish engulfing candle, a lot of bad US data comes out today and tomorrow. A lot of a favorable euro data comes out. It's going to push that above the 38.2, and if you can find a very strong support going into next week, then that leads us into looking at potentially more profit. We don't want to trade a lot of risk over here because, as I said before, we've seen a lot of attempts recently at this level and failures. Okay, we don't want to be chasing the bucks. We want to be trading confidently in the direction where there's true sentiment. RMO has been making high highs. That's a good thing, but the MACD is definitely slowed down, and that's only going to happen because as we head into these areas, the MACD is going to start to converge and diverge. Onto sterling, good old cable. A lot of positive sentiment as with the euro. Not as positive long term as euro has, but you can see intraday very much positiveness, and you can see over the past week or so we've seen a lot of buying sentiment after these bullish engulfing tweezer bottoms here on a very strong support, and prices got above the 24.6, which is our monthly February retracement area, which is that constitutes to that very strong major support and resistance level going back to 2010 lows. So getting above here and staying above this, above the 20 and the 50 here, fantastic. As it stands at the moment now, breakout, the pullback, we had a consolidation pullback on the 23.6, then the buying sentiment coming through, so telling us that sterling was still wanted to go high against the euro. Sure enough, the US dollar moving into the 38.2, which is our weekly February retracement areas. And now you can see on the daily now trading above that all important 38.2 near term. Getting a buy signal on my 4-hour time frame. There we go, 4 hours, everything positive, looking fantastic. Above the institution, above the 38.2 now, which is important. Ideally, I'd like to see the close of this 4-hour candle. As long as it's above the 38.2, then I should be looking for further upside movement on this particular pair. And my first target would be the 50% retracement area, which is a good, if I just take the high now of the candle, still now 147 pips away. RMO making higher highs, which is positive. MACD making higher highs. However, the MACD has dropped, which is understandable as we head higher. Just got to be aware of that. We are going into a lot of news throughout today. We've also got the interest rates announcements for sterling, and if I just look at the interest rates, they're looking at 0.5%, no change. It'll be interesting to see if they stick with that. Otherwise, we have the asset purchasing facilities, 700. Are there going to be a change to their purchasing plan? Merv King and his sidekicks, are they going to change that? Like the Fed said, they were going to start to do tapering on their quantitative easing. Do we see Merv King and his sidekicks actually changing that policy, the asset purchasing policy, from which is currently set at 775 billion pounds? It'll be interesting to see. We also have the MPC rate statements today, tentative, that can come out any time. So, and then we lead into this afternoon with unemployment claims for the US market. So it's going to be very, very interesting to see what happens. But as it stands now, sterling looks very, very positive at the moment. So as long as it maintains about 38.2 near term, look to see if we can actually look for buying opportunities, and then target the 50% retracement area here, which is our weekly retracement area, which is a good 140 pips away. Okay, so moving on to US dollar Swiss franc. Just move the chart here so you can see it. You can see how off the back of the news from the Fed, potential tapering of the purchasing plan now, the QE3 plan, you can see the US dollar has actually fallen from its heights. This particular pair, US dollar Swiss franc, was attempting to break above the 23.6 February retracement, which happens to be our monthly February retracement. Clearly, breakout, then the pullback, but that pullback being a tweezer top, and price reverted to the downside. But price sentiment still wanting to reattempt, had a nice bullish engulfing candle above. However, long-term sentiment just saying no, nothing up there, and this pretty much coming out for the fundamentals because of what happened with the Fed. This is a clear negative signal, and you should be looking for shorts opportunities since then. Ideally back to this price support and resistance level, which it did. Clearly bounced, a bit of profit taking, but the sentiment still looking negative and breaking through, pullback, and now we're seeing the continuation lower. Continuation should take us back towards the institution, but ultimately back towards this 23.6 February retracement area here to the downside. A lot of resistance here, or a lot of consolidation resistance. We're going to be well aware of that. We are going into a lot of data today and tomorrow, guys. So all the charts really painting a picture of where price is trading right now into major consolidation lows and highs, which pretty much ties in with fundamentals. So we've got to be very, very aware and very risk averse here, because we don't want to be trading with far too much risk with very little profit. Okay, so it's far better to rather stand aside when times are like this, get a clear direction where price wants to go, and then we trade it. It's far easier to trade that type of momentum than to try and speculate what's going to likely to happen, etc. Here again on the indicator box, you can see quite a lot more red than blue, and that's clearly showing us the sentiment near term is being negative. RMO is still above the zero line on the daily, but the MACD you can see well sold. to the downside. And as it stands at the moment now, you should be looking for trades to the downside, but be aware that we are going into a lot of data today and tomorrow relating to non-farm payroll. The figures that came out yesterday, we had the ADP non-farm employment change figure was really negative. They were expecting 171,000. It came at 135,000 yesterday, which is far less than they expected, which was not a great, since they forecast, which was not a great indication of sentiment. So that saw the US dollar losing ground further, and it's likely to use. If that is the case, we should be well aware of it. This afternoon we have unemployment claims. They're expecting less people to be claiming for unemployment. That's going to be positive for the US dollar. If it is the case, if it isn't, then we're going to see further negativity on the US dollar against its cross pairs, which leads us into Friday. And the non-farm employment change over here, they're expecting they're expecting a positive figure, only just slightly higher than the previous figure, but still positive from the last month's figure. So interesting indicators here of what's likely to occur on there. So be very attentive when you're trading these particular setups. The US dollar Japanese yen daily, we've seen a lot of positiveness for the US dollar against the yen recently. However, that's all come unstuck, as I mentioned, with similar to the US dollar Swiss franc, as with the QE3 plan. Fed announcing potential tapering of that, and sure enough, we've seen price trading above the 50% monthly Fib retracement here, which was a major support and resistance level recently, breaking above it, but not really moving higher after she consolidated here with this tweezer top, bearish engulfing, and price has now reverted and retested that price support and resistance level, this major one over here. Noticeably, I said yesterday we wanted to see either, if it was to be positive, then we want to see a bullish engulfing candle. If it was negative, to see if this negativity in the US dollar was genuine, to see a bearish engulfing candle, and yesterday's candle very much on the daily giving us that indication. So now trading below the 50%, we should be looking for nothing more than negative opportunities or shorting opportunities for the US dollar against the yen. So as long as it maintains below the 100% here, 100 mark, sorry, then we should be looking for negativity. So we should be taking the low of the daily yesterday as our support area. We want to see a price trading below that. So if I can just bring it into thing, you can see quite clearly here. If I take that white line, you could use that as my support. Quite clearly see a bounce. The reattempt of the institution moving lower again, and now staying under all the moving averages, which is the negative sign. Swing lows, which is a negative sign. See, I'm building it all up. The only thing that's in the way now is currently the support, which is under all of this resistance over here, which is telling us we should be looking at negative. The long term is up, but you can see the RMO on our intraday time frames, our daily, 4 hour, hourly, 30-minute, etc., negative. And that pretty much plays, except for the daily, that plays with the moving average, institution moving average, which is also above price. Excuse me. RMO making lower lows, even over here, for example. This low over here is testing the same low here, but you can see the RMO is very much further negative. So which is a negative sign. MACD is still below the zero line, which is also negative. So what we want to see now is we want to see a clear confirmation break of this near-term resistance. Support, apologies, at 98.63. Get that, and then we should be looking for nothing more than negative opportunities back down towards the next level, which is my 38.2 mark on my monthly target, which is a good 462 pips to the downside. So very important here again. Haven't traded the US dollar Japanese yen because I wanted to see a confirmation signal on my daily, which we did, which is telling me I should be looking for further negativity. But now what I need to see is a break of my near-term support, which is this 98.83 mark. Get below that, then I'm sure looking for entries to the downside, and that 400 pip target to the downside is my first port of call. So that's it for today, guys. Short and sweet. Good 15 minutes worth of analysis here. Be aware, I cannot stipulate we are going into non-farm payroll tomorrow. Today is also a lot of data this afternoon, and interest rates announcements for both for the UK as well as Europe, and then we have unemployment claims, and then we have CAD this evening as well. So there's a lot of data today, guys, that needs to be processed leading up until non-farm payroll. If you're not trading anything, you'll notice that most of these pairs are trading against major support and resistance levels. It's far better to wait patiently. If you're not in any trades, rather stand aside, wait for the confirmation, and then trade the outcome. Don't speculate. Don't try and get in now and try and catch up anything as we head into a lot of this data, because I can tell you, you will come away with a loss. You will get scorched, burnt. You don't want to do it. I'm talking from experience. It's not worth it. So rather be patient, wait for confirmations after all this analysis has come through, all the data has been produced, etc. And if it's still falling in the direction of what the trend's been doing over the past week or so, then great. Next week, look to capitalize on that. Okay. So if you are using this template, please follow the rules of it and please back it up with sound money management. That goes for any template that you're trading. Any strategy template that you're trading, you need to apply really solid money management rules to it. Okay, so do those, stick to the basics, and you shall be profitable. I keep saying it to my students, and I'll keep saying it to anyone out there who wants to listen to me. It's so important, it's so vitally important to rather stick with the simple things that make up trading, and the rest will just fall into place. Okay, have a fantastic trading day, and I'll catch you first thing tomorrow morning. Until then, you guys trade serenely.